Welcome back, IB Economics students, to this video lecture. Today, we're going to be talking about the two major types of taxes the IB course really wants people to learn. There's the specific tax and there's the ad volume tax, okay? And these two tags are illustrated in two different forms, okay? The specific tax is illustrated in this graph right here, and the ad volume tax is illustrated in right here. And I'll be talking about the specific tax first, and then on the same video, in this video, we're going to be talking about the ad volume tax as well. Okay? So looking at the specific tax right here, I'm going to boom this picture up. What can we see as a direct result? First of all, it is a direct shift of the supply curve from right to left. Okay? The supply curve directly shifts from right to left. And this is a direct result of an increase in prices because of the increase in taxes. So what also could we see? So right here, when the original, so when drawing our tax forms, we have to write supply original, and then we could say, and then this one would be supply plus tax. Okay, so that way we could differentiate between a original supply and a supply after the taxes. So looking at the price level, right here is the supply original. When supply is at the supply curve, looking at supply original, at the price is 1. Okay. However, with the tax, the supply is risen to supply of 3. Therefore, we could from this graph we could be able to tell that due to $2 specific tax, the entire supply curve shifts to the left by 2 units. Okay, so this is the supply curve illustrates the increase in price for the specific quantity of a good directly as a result of an imposed tax. Now, what is the difference between a specific tax and an ad volume tax? An ad volume tax, as seen right here. Now, right, an ad volume tax right here shows that the increase in supply, the supply curve not only shifts to the left, right, it not only shifts to the left, but the slope of the supply curve also changes, right? So the slope of the supply curve also changes. So in a specific tax, the slope stays the exact same, seeing as how the entire curve shifts to the left instead of having an increase in slope. However, ad volume tax, okay, and ad volume tax is where a percentage tax is imposed. Therefore, the tax quantities increases marginally as the price of a good increases. Now, this ad volume tax, therefore, the slope of the supply curve after tax would be steeper, would generally be steeper than the specific tax. Right? Now that is obviously because when there is a higher when the prices of a good is higher, the percentage is marginally higher than a specific taxes. Therefore, when illustrated in graphic form, the slope will be steeper than what it was originally. Okay, so a specific tax is when a fixed amount of tax is imposed on a good. Okay, so for example, let me give you an example. For example, e.g., for example, $2 tax is placed on all tobacco products. Okay, in this case, it is a specific tax because for every single tobacco product, a $2 tax is levied. Okay, so the entire supply curve shifts up by $2. However, for ad volume tax, let's say this will be a percentage tax, right? So for example, a 5%, okay, a 5% tax is placed on all on 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 all on all cars. Okay, so that would be an ad volume tax because it is not a specific tax. However, it is a percentage tax. Now, as the price of a good increases, the marginal percentage also increases disproportionately. Therefore, the ad volume tax will show that the marginal increases of the tax will be much higher in proportion to the original principle of the tax placed. Okay. So these two are the two indirect taxes. Now, what is an indirect tax versus a specific tax? Indirect tax versus a direct tax. I think this is also really important for people to know. So, indirect tax versus a direct tax. Okay. So indirect tax, indirect taxes. Indirect taxes are taxes placed on goods instead of directly placed on people. Okay, so what are some examples of indirect tax? Taxes on tariffs, taxes on goods, taxes on consumer goods, production goods, and therefore specific taxes as well as ad volume taxes falls under indirect taxes. Now, what are direct taxes? Direct taxes refers to income taxes. Direct taxes refers to property taxes. Direct taxes refers to perhaps car taxes or automobile taxes. These taxes are direct in the sense that they are directly affecting or directly targeted towards individuals. While indirect taxes are not discriminatory. They do not look for what property or what income you have. Indirect taxes look for what goods you buy. Okay, so that differentiates between indirect taxes and direct taxes. So in this explanation, we looked at the difference between indirect taxes and direct taxes. We looked at the difference between specific tax and an ad volume tax, and how a specific tax is a fixed amount of money placed upon a good, while ad volume tax is a percentage tax placed on a good. Now, examples of specific taxes are tobacco products, where a $2 fixed rate or $2 fixed tax is placed on it. Therefore, the entire supply curve shifts to the left or shifts 2 units to above because of direct taxes. Where ad volume tax, the slope will increase due to the marginal increases of the taxes being much higher, concerning the principal increase at a higher rate. So these are the two major taxes, which is the ad volume tax and a specific tax, and the indirect taxes. And we also examine the two tax types, which is direct tax and indirect tax. I hope this video is helpful, and I'll see you guys in